Okay, part 2 of the required wants you to calculate current tax. Now this part of the question is likely to be out of about 20 to 25 marks, because not only do you have to do current tax, but remember, in order to do current tax, you're also going to have to calculate deferred tax. It is just a calculation, but what is important for current tax is how you set the calculation out. So make sure you know the best way of setting the calculation out. You'll also notice when you look at the video that I choose to do a tax column as well as taxable income column. And this is just to make your disclosure easier later on. So if the question didn't ask for disclosure, I wouldn't do the tax column. But because the question does ask for disclosure, I've chosen to do a tax column as well. So you start with PBT, you deal with your exempt differences, which is quite straightforward, and then you've got to do your temporary differences. In order to do the temporary differences, you're going to have to do the deferred tax calculation, calculate the balance, get the movement, and then work out how much of the movement is going to profit or loss. This is probably the most challenging part of the question and the most time consuming. So you are going to struggle with this a little bit. You're probably not going to get it 100% correct, and that's cool. But just make sure that you earn as many marks as possible. And remember, even if you take a little bit longer to do this section, it's not a train smash, because you'll pick up time later on when you do the disclosure, because your calculations are going to help you there. Right, we're now moving on to part 2 of the required, which was to calculate the income tax expense for the year. This is the most significant part of the question in terms of calculations, because a lot of calculations are going to be required. Also, what's important here is your approach. Now you're going to see that when I do my calculation, I actually have 2 columns. I have one column to calculate taxable income, and I have a second column for tax. The second column is not necessary, but I choose to do it because I know that I've been asked to disclose income tax expense, and that requires a recon. So if you do the second column, it means when you do your disclosure, you don't even have to think about the numbers. You can just pick them up from your column and pop them into the disclosure. So it really is a valuable exam technique tip at the end of the day. Okay, so calculate current tax. Remember, there's a format. You must set it out in the format. Even though it's only a calculation, it should still be set out in the correct format. Remember also, the starting point is PBT. It doesn't matter what your PBT was that you calculated in part 1 of the question. As long as you are using your PBT to start this part of the question, you will get the method mark, because it is a method mark. Okay, so part 2, current tax, is what we're calculating. And to calculate current tax, we have to start with PBT, and we'll start with our given PBT of 1072750. So this is the taxable income column, and this is the tax column. And what I'm going to do straight away is, once I've written down PBT, I'm automatically going to calculate 28% of the PBT, 300,370, because that's my starting point in terms of my whole matching of tax. Right, what's the first thing that we do when we do a current tax calculation? We deal with exempt differences. Some of them you'll identify very easily from the question, like dividends received, like the tax and penalties, but others are not so easy to spot. For example, the fair value adjustments on investment property. So let's just think about that for a minute. SARS doesn't recognize fair value adjustments, but what he will do is he will tax you on the capital gain when the property is sold. So we've got land and buildings. Land, tax implications, always CGT. In other words, the fair value adjustment on land always has a 20% exempt difference, because SARS only taxes 80% of the capital gain. Therefore, the other 20% is exempt. With regard to the building, SARS gives a tax allowance on that building. Remember, any building on which SARS gives a tax allowance, the tax consequences will always be normal tax, 28%. So no exempt difference there. So the only exempt difference that will arise is the fair value adjustment on the land. And then the other exempt difference that we've got was also given in the question, and that was the donations. So we've got 4 exempt differences. Just list them, and then we'll pop all the numbers in. So dividends received, penalties and interest, donations, and fair value adjustment on land. Right, so we put the figures in. The only trick here is to really figure out, am I subtracting or adding? And remember, the logic is the item is included in PBT. So if it's income and it's not taxable, you're subtracting it to take it out, which is why we subtract dividends received. If it's an expense, like the penalties and interest, we're adding it back because it was deducted from PBT in the first place. And note how I've just used the 35,550 that I calculated in the previous part of the question. If you made a mistake there, you'd still get the benefit of the method mark. The donation, 4,000, I just add back, and then the only one I have to calculate is the fair value adjustment on land. And if you go up above, you will see the fair value adjustment on land worked out to be 70,000, and times 20% is the exempt portion. Again, a fair value adjustment is income, so to subtract that, we need to take it out, we need to pop a bracket around it. And as I said to you, do your tax column as well. So I'm just going to quickly put all the figures in, and then I'm going to unpack them with you. So 189,840 is the tax effect of the dividends received. 9954 is the penalties and interest. 1120 is the donations, and 3920 is the fair value adjustment. Now, what is so nice about doing this tax column is if you subtracted or added under taxable income, you do exactly the same under the tax column, and in turn you will do exactly the same when you do your tax recon note. Okay, so dividends received in the tax recon will always be deduct the tax effect, because that's often the trick, is trying to figure out, am I adding or subtracting when I do my recon? If you do this, you don't even need to think about it, because it's exactly how you've done it in this part of the question. Okay, so that's all our exempt differences. So we now calculate what I like to call my matching profit, 420,300, because that's what our total tax must balance to. And then 117,684 is 28% of the matching profit.